Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and this is where we will discuss everything about the market, the current move on the benchmarks, the sectoral indices, the stocks that are on the move. We'll help you understand what is leading to the sharp fall you're looking at into the market. So straight on to the Nifty and the Sensex and the current levels. About 636 points of a fall for the Sensex right now, 65,827 currently. The Nifty is now slipped about 200 odd points, 1% lower for both these major indices, 19,540 currently for the Nifty. Let's delve down to see what is the action like on the broader markets, the Nifty Bank and several other indices as well. So the Nifty Bank is also feeling, a sharp pinch, 1.1% downtick, 45,074 currently for this one. Among the mid and the small cap indices also, you will see that the mid cap 100 index is also down in the same measure, 1.15% down in trade for this one as well. Sectorally speaking, the small caps down by 0.9%. Sectorally speaking, the Nifty Bank, like I said, so all the constituents of the Nifty Bank are also trading with losses right now, with the financial services, PSU banks feeling a sharper pinch, 2% almost down for this one. The private banks down by 1.2%. All the sectors of the Nifty are down in the red, and most of them are down almost 1% in today's trading action as well. So, are there any bright spot? We will definitely look at them, but first let's get our expert with us. Mr. Hemang Jani joins in, market analyst with us. Welcome, Mr. Jani, and thank you so much for taking the time out. First up, help us explain, what is the reason behind the sharp fall in the markets? Is it the Fitch ratings downgrade? Would you blame that entirely that has come in on the US, or is there anything else to do that is also impacting the fall in the markets today?
Yeah, good afternoon. Thanks for having me. Yes, I think the main trigger that is coming for the correction that we witnessed today is the downgrade by Fitch of the US economy, wherein because of the growing concerns about the way the debt has grown and the way the government there is not able to resolve certain debt related issues in terms of the limits and the overall debt ceiling which is there. There is a sense that maybe there could be some amount of risk because of that, and which has actually triggered off the correction in our markets. I think, Sakshi, we should not overplay or give too much of importance to these kind of developments, because credit rating agencies typically are behind the schedule when it comes to taking any decision in terms of the rating change, and the market is forward looking. So sometimes there can be a knee jerk reaction because of these kind of developments, but I do not see this necessarily as a reason for a deeper correction for our markets.
Okay. Just for a wider audience, let me just help them understand what exactly has happened. So Fitch Ratings has downgraded the US sovereign credit grade by one level from AAA to AA plus on the basis of ballooning fiscal deficits and erosion of governance that have caused repeated debt limit emergencies over the past 2 decades. Now remember, earlier in May, Fitch had already put the US credit on rating watch negative, which is an implicit warning that a downgrade could come. So this is not altogether a surprise. But Mr. Jani, just to understand this in greater detail, what does it really mean for the US economy at large, and what would be the implications clearly?
Sakshi, the interest rates are linked to the rating that the sovereign country gets. Also, many intercorporate transactions are also linked to the credit rating that the corporates have. So to that extent, it has some impact on the interest rates per se. But the market, as I said before, is forward looking and would have already priced into a great extent, because if you see the 10-year bond yield movement in US, it had already touched about 4. So market was actually anticipating such a move. And I think maybe temporarily you might see the 10-year bond yields really spike up, and to that extent, it would have some negative rub off on the market. But I do not see this as a major negative for our own markets.
Okay. What will happen to the borrowing costs in the US, the investment flow in the country? How are you also looking at concerns like, there have been tax cuts, the new spending initiatives which the which the Fitch has alluded to, which has led to the downgrade as well. How are you looking at these challenges and anything else that you foresee coming in for the US economy?
I think the short-term 10-year and 5-year bond yields would see some increase, maybe 5 to 10 basis points. And since the market was already looking at that, it is not coming as a major negative surprise per se. And I
Hmm.
think the larger factor for the US markets is the earning season. And by and large, if you look at the US, the earning season is progressing reasonably well. We haven't really seen any major negative surprises. So I do not think that either US markets or Indian market would have a major negative impact. I think we will go through a little bit of correction because we also have seen a very smart run up, but this is not a trigger which can cause a major correction in either US market or India market.
Got that. So for the Indian markets and Indian investors, what does today's fall really mean? Should one really then, ignore the noise and continue to buy the stocks that they've been focused on? What would be the entire impact on the Indian market at large?
So as of now, even if you see our this quarterly earnings season, it's progressing well. Almost about 33 companies have of Nifty 50 companies have delivered numbers. By and large, it's been pretty decent show. Yes, there is a little bit of concentration when it comes to the positive surprises, which is auto,
Hmm.
banks, and all that. But nevertheless, the numbers are good. Number two, we had seen a very smart run up. If you see last, let's say, few weeks, Nifty broader market, the run up has been quite swift. So it is very normal to go through swift correction, as we haven't really seen any meaningful correction at all. So
Hmm.
I think that this should be used as some sort of normal correction. Look out for the buying opportunities wherever the companies have delivered good numbers or the theme is playing out well. So I'm not too much perturbed by what we have seen today in the market.
Got that. Let's get down to some of the other stocks, news flows, and then understand from you where the opportunities lie for investors then. First up, let me take a stock which is ticking up quite sharply. SpiceJet, that's a stock that I want to discuss with you. And of course, we will discuss Indigo at length as well because the earnings are awaited. 31.64 rupees currently for SpiceJet. It's up by 8 odd percent. Now, I'm reading some reports currently that suggests that perhaps Carlyle is going to be taking a stake in this space, and which is why the stock is buzzing. Your thoughts on the on SpiceJet, the news flow, and then we will come to Indigo later.
So actually, SpiceJet is a very high beta stock which had its own sort of troubles or the issues, because of which there was a major correction in the name. And what is very surprising is that despite the fact that the there was a decent amount of growth in the domestic airline traffic, the company ran into some sort of a problem. Even Go Air, we had some issues with respect to the cancellations of flight and all of that. So I think these names, SpiceJet and Go and all, they are very high beta names. And typically, when you see any news flow of capital raise, etc., you will see some reaction. But it's not a very high quality name that one would really want to get into. Yes, if you're a trader and you want to really play momentum, maybe it can give you a good 10, 15, 20% kind of an upside.
Hmm.
But otherwise, I'm not too comfortable getting into this name.
Got that. What about Indigo, sir? And is that a stock that you track? And there are earnings that are awaited. Reports suggest there are going to be a record amount of profit that the company could post this time around. Your own sense of Indigo?
Yeah, so Indigo definitely is far better play in terms of stability, in terms of the crude price volatility that you see over a period of time, and particularly given that the other airlines are going through some sort of trouble. Indigo also has kind of increased their market share both on the domestic side as well as on the international side. So we think that this quarterly numbers of Indigo are going to be exceptionally good because this quarter crude prices also have cooled off, so it would also have some sort of a rub off, and the air traffic has continued to grow. Also, Indigo has announced international new for example, African countries, some of the other Middle East countries. So I think on the international front, they keep on expanding their routes. Domestic side, as we all know how the growth has been, and Indigo has been a big beneficiary. So I think this is a great company to really invest from a 1 or 2 year kind of a perspective.
Understood. Let me get your sense on the Adani Group of stocks, sir. Some of the companies have already come out with the earnings in Q1. The group stocks are on a rise. We've seen, in fact, in the month of July itself, about 71,000 crores of market cap being added to the conglomerate's market cap, which is now at around 11 lakh crore rupees. The kind of earnings that we've got so far, what have you judged from these earnings so far? They've gone through a tumultuous period right from the beginning of 2023. But do you now say the worst is priced in and now people are just going to be focusing on the earnings and the company's fundamentals going forward?
So one or two things actually. One is that in terms of numbers, I think the company has delivered reasonably good set of numbers when it comes to Adani Enterprise, Adani Port, even Ambuja. The numbers, Ambuja ACC numbers have been pretty good. And today, in a weak market, we are seeing that there is a little bit of strength that is there in the cement pack. One important variable when it comes to Adani Group is that there is the final Supreme Court, hearing
Hmm.
for the controversy that took place, which is awaited maybe over the next couple of months. So I think once that is out of the way, that can provide a big positive trigger to the group. I think given the fact that a lot of institutional investors have expressed interest and the company has been able to do even Mr. Gautam Adani has sold some stake to some of the prominent investors, and there is also a possibility of company doing QIP. So I
Yeah.
think that is surely a little bit of positive, and the companies are holding out pretty well even in a volatile market scenario, which is surely a comforting factor.
Got that. Any particular names that you're more positive on than the others in the Adani pack?
So I think Ambuja definitely would be one company that I would be more comfortable with. Adani Port, again, the numbers were pretty good and they have a very formidable position when it comes to the, overall port and logistics space. So I think these are the two companies where there is not much of an issue. The other companies, be it Adani Enterprise or Transmission, Adani Power, those are a little high beta names. So when the market goes through a little bit of correction, you might see more impact in terms of corrections. But surely these two names are looking quite stable.
Got that. From the overall markets, any particular sectors or themes that stand out for you? Like you pointed out, about half of the universe of the Nifty has posted their earnings, mostly in line right here. After that, are you building up any particular bullish move, sentiment on some of the sectors?
So I think one pack which I like is the pharma pack, which has seen a little bit of momentum and is in a consolidation phase. But given the new data points coming from the US generic market, even the domestic side, things are looking pretty good. So some of the names like Sun Pharma in the large cap pharma space and Granules in the mid cap space is looking quite compelling. Apart from that, I think real estate, if it cools off a bit, I think
Yeah.
it will provide a great opportunity. Maybe something like a Lodha or Oberoi, which has just announced the numbers. I think real estate theme is likely to really do well from a medium to long term perspective, and we should look out for entering into it at a 5 to 7% kind of a correction.
Understood. How are you looking at the way the oil prices are now moving? That's Brent crude is back at $86 a barrel. In the last 1 month alone, we've seen the rally of oil prices right from $74 to about $85. So a sharp move in just a month's time out. What does that really imply for the oil and gas stocks and the stock market sectors that will be impacted with the rise in oil prices now?
Oh yes, I mean the way the oil prices have really moved up in the last 3 to 4 weeks is a bit of a concern for our markets and more so for some of the oil marketing companies where already there is a little bit of pressure in terms of marketing margins. So you might see a little bit of negative rub-off on names like HPCL, BPCL, etc. I think gas companies also have some issues like Gujarat Gas. There is a sense that the volume may not be that good or there can be a little bit of pressure on the margins. So I think in the near term, because of the way the oil prices have moved, it would be a bit negative for this sector.
Understood that. Well, on that note, thank you so much, Mr. Jani, for being with us on the show and discussing all the insights on the markets and various pockets, the opportunities that exist for the investors and participants right here. Always a pleasure having you with us on Business Today TV.
Thank you so much, Sakshi.
Right. So let's quickly look at how the markets are looking. They've come off the lowest point of the day, but still about 600 points of a decline for the Sensex. So the bears are on a growl. You can actually see the Nifty also down by 180 points at 19,553. But several pockets still look interesting. Maybe this dip could actually offer you an opportunity to buy into quality fundamental names. Just like how Mr. Jani pointed out, several of the sectors and the kind of stocks that he's still bullish on despite this overall move. And one should clearly just see it as a knee-jerk reaction to the global developments that we've been seeing in the Indian markets, not so much for the overall domestic picture clearly. We'll continue to watch out for how the markets move from here on, so do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well.
Well, hello and a very warm welcome to Business Today TV.
Thank you.
I am Chetan Bhutani. The rationale behind this move, sir, because Maruti Suzuki has always maintained that the company would be asset light model, and by you taking this asset on your books now, sir,